why do you need to know what other market cycles do, like crypto, the stock market, and other markets around the world, to ensure that you're investing at the right time in the right locations and understand how the Australian property market is going to play out? Hi, I'm Jaryd Krause. I'm the host of the Property Pals podcast with my other co-host,
Sam Powell. And mate, in this episode, we go pretty deep into understanding market cycles and how that affects the Australian property market and things to look out for. There's many things to look out for, obviously, but there's a few key things that I'm seeing in the market that hopefully can help you build that confidence coming forward in your decision making for 2025.
Yeah, and apologies on this one, Sam. I do a little bit of grilling of you of like, well, hang on, are you positive here or are you negative here? What is this looking like, and where are you positive and where are you negative? And so, guys, stay tuned for that, because we do talk a lot about different market cycles. We talk about immigration. We talk about what different locations and how they affect it. We talk about short-term investing versus long-term investing. There's so much value in the pod. So it's also not the only way we can help you for free. Get our How to Maximize Your Borrowing Capacity mini course at propertypals.au. For now, let's dive in. Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. Good morning, Sam.
Well, Jaryd, welcome to another episode of the Property Pals podcast, Australia.
Yes.
And today, what are we talking about, mate?
Well, I'm just going to pick your brain. Talk about markets, and just brought up a topic that I just know that you absolutely love, like macroeconomics, and mostly about how other markets affect the property market. When we rocked up on our call today, I asked you prior to hitting the record button, like, what's news what do you think's like, what's news in your world of property? And you mentioned we're coming out of a winter slump. Things are normalizing, but then also we've got crypto craziness happening.
Well, you're on the crypto pump. We're all excited about it.
Yeah, exactly. I've seen a really good meme of like people in a car driving. There's like four people, and one person's like entered Bitcoin at like 10,000. Another person was like 35, and the other person was like 57. And the fourth person was a driver, was just like looking at these guys that were just having a massive party in the car, just like didn't buy into crypto at all.
Oh, speaking of which, I saw another one where it was like this guy's like, oh yeah, I bought into Bitcoin, and he's like all gold chained up, and then 5 minutes later he looks like an ice addict, like, oh man, and like, can you give me $5? Then it goes, his mate gave him $5, and then he's like turns over to him, he's there like back in gold chains, like, so, I just put this on some altcoin, and I'm now loaded again. Then like 2 seconds later, it's like, what happened, man? He looks like an ice addict again. It's like, that is the roller coaster of the crypto market. It
is.
I mean, obviously we dabble in it, but only a small percentage is sort of my ruling. 5% is where that sort of sits, because it is a really interesting asset class, and technology is evolving quite rapidly. And like, the issue that I find with most, I guess, people is they might luck into a lot of growth into the crypto market, but when it comes to making, we talked about this on a previous podcast, like, a couple $100,000 or a couple $1 million into where to invest your money, it's generally not in crypto. And that's why I'm more pro property, because it's more of a, I guess, there's more history in the asset class, and there's lower risk. And when you're dealing with millions, a lot of people, when you get to this level of wealth, I've come to see, is that they're not so fixated on capital gains. They're more like wealth preservation is where they're at. And that's why a lot of wealth transfer goes into property at the end of the day.
Yeah. Warren Buffett's first rule of investing is don't lose your money. Second rule, revert back to rule number one, right? It's a massive paradox. Investing is like, why do people invest? To make money, right? But really, like, yes, that's the energy behind it. You want to make money by investing, but firstly, you still want to like preserve it.
The emotional.
And also, sorry, go on.
Like you got to think about it emotionally too. Like a lot of people get more emotionally affected from a loss than they do from a gain. So try to think of it.
Also, yeah, you're right. Emotionally, and people go through different stages of emotional intelligence in their, well, if they're evolving and they're working on their emotional intelligence, we go through different stages of emotional intelligence in our life and our investing career. And when you're first starting out, normally you're far more volatile emotionally. And then when you mix that with a more volatile asset class like crypto, it's a recipe for disaster. But for somebody that is a seasoned investor that's like, look, I'm happy to buy a Bitcoin and just leave it for 30 years. Like, and then they're going to let that volatility happen, but also they're just within themselves, they're just going to not be checking the charts. They don't care about it because it's 30 years. Who cares what it does up and down here, round and round? They just know that over the long time, it's going to grow of like a stupid amount of percentage a year.
No one knows, mate. There's no guarantees in life.
Correct. Yeah, correct. But typically, the longer form investors like outperform. And so when we're starting out, like it's so difficult. Like it's like this. It's a recipe for disaster investing in crypto when you're just starting out investing because it's a volatile market with your volatile emotions.
Yeah, well, this goes back to when we had Luke Metcalf on the podcast from Microburbs, and he's saying that it's actually funny how through the data, owner-occupiers actually outperform investors from a capital growth perspective because they're not buying it for like an investment return. They're just buying to live in it, and therefore they have a longer mindset around it. And that's obviously what we're trying to help people with as well, like just shifting their mentality. But there is, obviously I do it every day. There's so much emotion in it. And I get it. It's just obviously trying to educate people as to what they're getting involved in because how do they know? They don't study this stuff every day.
Exactly. So back to the topic of discussion, crypto is going to be a part of this discussion on how other markets move property markets, or they affect property markets, I should say. So time of recording, when this gets released, though, it'll be a little bit different. Trump has been elected. Trump's come into power. That's changed a bunch of things in the world. Like that's pretty massive. Like when any election, of course, Trump's got a lot of media around him, that guy. But that changes things, which also helps change, confidence in like less lack of confidence or more confidence in the world. And it's done really good for crypto, which means a bunch of other things are happening. What does this look like? Like I've said before, typically, crypto markets first to go up or down, and then you've got, the business cycle, which is, stocks. And then you've got property. What is this looking like now, 2025? Yeah, like for property based on how these other markets are moving. And obviously we're not financial advisors. We're not, financial analysts and forecasters, but we do.
Just two hacks having a conversation.
Yeah, exactly. But Sam knows more about macroeconomics than me. So let's get into it, Sam. Like, what are your thoughts?
Yeah, well, I mean, I'll preface everything with like we're all learning and we're all growing, and I don't have the answers to everything, but I am very interested in how this works because I've just seen it, and I've seen the flow-on effects by understanding different cycles and the emotional impact that can really have, and it really does help because if you listen to the media or you're on sort of like social media and things like that, you can get really inaccurate like information, and it's really difficult to find people to trust in this space because in the wealth generation space, you think about it. People get into it. They understand the market. They generate a profit out of it to a point where they don't have to work anymore. So then they just stop working. So then it's not in their best interest to sort of share that information. But there is like the purpose essentially in life is to people do get a lot of validation from helping others, and there are those people out there. It's just really difficult to find. From what I've come to experience. So I'm just obviously we've all got teachers and mentors in the space, and I'm just sort of just sharing what I know and what I've learned. But being deeply ingrained into the Australian property market, obviously buying around Australia, you do see trends, and then you start to put links together, and it's quite fascinating, really.
What trends do you see?
Just
how do you
different.
see crypto and Trump and like whatever it is affecting things for us in Australia?
Yeah, so I mean, there's political cycles and there's business cycles. We've mentioned that. So political cycles, so you'll obviously see the uncertainty that comes into the market before that election, because there's a lot of media hype around it. Whether it's a distraction for us people here, but there still needs to be an elected leader. That's just the society we live in, in that sense. So they do hype it up. My viewpoint is that the person, whoever's being elected, there's already an agenda in place, whether it's party A or party B. There's bigger powers at play. They're just a face in front of the camera that people who vote for. It's like a popularity contest, and that's why probably Trump is he had the win, but they come with different policies and people have different confidences around that. So basically what I've seen coming into this election cycle, and the reason why I talk about America, and people do talk about America, population size is like 330 million compared to Australia's, which sits around 26 million, top of my head. So much larger economy, biggest nation in the world. They are the powerhouse, and you should pay attention to what goes on there because it ripple effects throughout the world. So that's one thing to note. But what I'm looking at is there's property, because it's a slower moving beast. It's like a barge, I like to tell people. So it takes longer to turn around. But the reason why that's like that whole volatility, right? So you look at, say, crypto, it's probably more like a little jet ski or something, little dinghy, you're just zipping around. And if you zoom out in the bigger picture, like crypto's only really been around for sort of 10, 15 years, so very short time frame. The stock market's been around for a lot longer, and that's another indicator. So what we've seen, getting down to the meat and potatoes, is this US election's gone through. Trump's in. He's pro crypto. Don't get me wrong, but he's not just pro crypto. Like that could be a play for votes. He's pro America and profit. Like he is a businessman.
Capitalism.
Right? And then you look at and this. I hope it won't get taken down, mate. But the Biden administration, even the Bush administration, like if you zoom out, and you look at what assets that those families own and the bigger picture there, they're very heavily involved in defense and technology and all that. So what does that mean? Yes. So whereas Trump, he owns hotels and high rises and businesses. So he's pro, let's all work together. We want a thriving economic environment because that's more profitable for me or my interests and my party. And that's, probably where that sits. The confidence levels come in. Don't get me wrong, like there's still a lot of money to be made in either side because they both, as leaders, you want economic prosperity. Like it's just, how does that come? Because you don't want a nation that goes into like a recession or depression. No leader wants that. So yeah.
How does this affect Australia?
So you'll see confidence come back. So uncertainty in America, what's all going on over there. Australia, it affects it in that we're still all caught up in that. We're a lot more connected these days. And then what we see is this crypto market's pumped. They call it the Trump pump at the moment, which is exciting. And then you see the stock markets start to increase as well. So a lot of confidence comes back into it. So how does it affect Australia? International confidence is increasing, therefore that increases the confidence into Australia. And through that confidence, it increases businesses' confidence. And businesses are more likely to leverage up to buy more, materials or plant and equipment for their business, put on more staff because they're more confident in the economic prosperity within the next 12 to 2 years. No business, like if you think about it, you're not going to go and, all right, I'm doing well, I'm going to put someone on. If you're thinking that, if you're seeing your trends and your confidence levels dropping, you're probably going to be more risk averse and not take on that higher risk. So, yeah, does that answer your question?
Yeah, it's so good to see. Like, all right, it's quite clear everywhere else in the world that this, election has given a lot more people in the financial markets hope, and that we see like crypto increase, which is also going to be helpful for business because, like you said, when people have more money, it gets rolled into their business. They do different things in business, and then also it's like, well, more money's available for investing in property as well. So it moves it all across the board internationally.
Yeah,
very important to understand.
The wealth. So yeah, obviously businesses increase their profits, and therefore that profit sort of gets distilled down, like increase wages as an example, and then people have more money to spend. And when more confidence, people are more likely to go and spend. Same as business, but on an individual perspective, they're more likely to go get that car or buy that bigger house or buy that boat. We're not there yet because we've just sort of come out a bit of a slow period. There's a bit of a hype around the interest rates coming through. But don't get me wrong, the last probably 1 or 2 years have been pretty challenging for a lot of people out there, just due to inflation and killing that. In the investment markets, this is the importance of data. Like it hasn't stopped in growth. I mean, you look into what Perth's done in the last year, what Townsville's doing at the moment. What Melbourne is about to do. Little sprinkle there.
A little teaser.
It's an interesting sort of time. So the way that affects property markets is a lot of it is confidence, and also the governments too. That like with that increase in confidence from the people, they're also increasing their spending. So if you go deeper into it, there's liquidity, which is what they call it, which is basically capital being injected into the economy to grow it, to build that prosperity. So like governments building more roads and infrastructure to support their people, that then leads into the businesses making more money, individuals making more money, and that helps to obviously grow financial markets, which is also the property market. So the beautiful thing around property is that it's not just an investment class; it's also we live in it, and there's a supply issue in Australia, and a lot of the developed world too. Because if you zoom further out, there's a lot of migration trends happening, and I mean we had Jaryd on the podcast a couple of weeks ago, and Australia is a very attractive place. So it's just the migrational trends of people. So he was mentioning that Australia is very big, like our natural growth rate is declining. And that's common for like places like Japan, a lot of these developed worlds. America is exactly the same. The way they're increasing their population is through migration. And by being a developed world that is an attractive place to live, and obviously Australia and America are, there's the supply-demand imbalance with people. So where do you want to go and move to at this point in time? A lot of people are choosing places like America, places like Australia, because it's obviously more prosperous for them. If they're going to move their whole entire lives, they want to be making sure they're making good income, living in a nice place that's safe, and that's why we can now sit here and go, all right, we've got all these applications for visas. Well, we want the doctors, we want the nurses, we want the skilled labor. You have that sort of you can cherry pick that quality
Mm.
a little bit more. So they're coming into Australia. That helps boost productivity. But the underlying issue, which is the biggest issue I feel in Australia, is where we're putting these people. And it's going to come, don't get me wrong, there's all cycles. There's
in terms of like the housing
prices. Yeah. The supply and balance in housing, and they're building all high rises and unit apartments in major metro locations, and it is going to dissipate over time, the level of demand. But it takes, like, people don't really understand, like, you get a government go out there and say, oh yeah, we're going to increase our housing because we know we're undersupplied. We've just released 200 and something thousand lots for approval. Okay, cool. Well, that's a lot of supply, and people freak out about that. I'm not going to buy in certain places because there's been 200,000 lots approved for, Victoria. So yeah, well, someone's got to go and buy that land. They got to go and get the development approval on it. They've got to then basically do all the infrastructure, pay for all that. A lot of the issues what builders and developers are actually facing is that it's not profitable to do it. So they're just sitting on their land banking it. And also local government councils, this is what Matt from H-Tag Analytics talks about as well, is like councils aren't going to go and approve, 10,000 lots, because there's no, like, that supply is not going to get sucked up. They do it in stages. And then the developers do it in their stages too, because they're running off a calculator. If they're not going to make a return on their investment, like, why would you? They're not a charity.
Correct. Yeah. So it's very interesting that housing issue is a longer lead time to solve than what people may expect. Let's just build stuff and we've got it there, and cool, click your fingers and it's done, right? It's a slow process. So we have it's a very interesting equation of, like, naturally, we're declining in population in the world, right? Like, there's the birth rates are decreasing, how many people we have, like, we're going backwards in terms of the amount of people. And so then we're very, very lucky in Australia to have been either born here or live here, to have this economy that a lot of people, it's one of the most prized places to live in the world, that want to migrate. So then we get our population declining, and we're still able to tackle that with increasing population because of migration. So we're always, it seems like it's very stable for Australia, for our property economy, to stage out the housing establishments and the builds anyway, to do it in, like, drips and drabs, versus just like, let's click our fingers and get it all sorted right now, because then it wouldn't be so good for the property market, right?
Yeah, and this is where it gets like, why I'm bullish for the next 1 or 2 years is because of the imbalance. It's reverting back to the new normal, as I mentioned, as you mentioned at the start, which is a good thing. But
we mentioned that before we hit the record buttons, actually.
It's reverting back to everything. Like, I mean, from a data perspective, everything reverts back to the mean, right? Like, that's what we're trying to get. But the mean is zooming out, looking at the longer term average. So, the longer term average doesn't sit at 20% growth rates with property year on year,
down to like the 6 to 9% growth rate, right?
On the last 30 years, it generally sits around that 5 to 6%. Is
there a possibility of there being a new normal? Like, yes. How we, like, the new normal might be higher growth rates or lesser growth rates, or is it just like you said, like, if slowly getting back to the mean? What's the new normal look like?
Yeah, I mean, you can always be a new normal. It's just like, how far back do you want to go? Do you know what I mean? Like, this could be the new normal for the next 10 years, but what's going to be for the next 20 and 30 years? No one's really got that crystal ball. Like,
well, there are a lot of podcasters out there apparently do, where they're talking about AEI, AGI as,
yeah, it's pretty crazy, actually.
There's so much speculation, man. It's so scary. This is where that's just distracting people, keeping people in fear with this level of speculation.
Yeah, you're in business, you know how it all works. Like people are more attracted to fear, fear campaigns and everything like that. And people just get smarter, but like there's always a lag effect. Like the general population, they lag that sort of business and marketing. As an example, now I just feel like people they're switched on. They now know that there's a big fear, you know, probably market crash in 2025, and then they click on it, and they click on it enough times to realize that person then starts talking about all the bad things that reverts into good things, which then goes, here, click here and pay my fee, you know, or like subscribe to my channel or some shit.
Yeah. By the way, guys, subscribe to our channel.
Yeah. That's a good. We're trying to, I don't know, just be ourselves and try and help people. It's kind of the whole idea, because you just don't know. But there is, there's always issues going on in every industry. It's just trying to find the people that are going to tell you the hard sort of truth. But it might not be in their best interest. But I guess getting back to what I was saying is where people are going to struggle moving forward for the next sort of couple of years is just buying anything. Like that's not the case anymore. There was a lot of people that did really well on buying vacant blocks of land and building a house on it, and they did well because building materials went up. They nearly doubled in value, right? The cost of building nearly doubled over the last sort of 5 years. And then the level of land supply was also low. So, they got that growth in those two areas, which also sent a lot of builders broke for doing fixed price contracts. But that's not going to stay, in my opinion, because it's just not sustainable. Hence why I'm sort of always talking about buying in infill locations. You can buy established properties, or you can that's where a lot of sort of small scale developers do well. They buy the land and then they knock it down and they build a couple of houses, and they're in those areas that people want. So I mean, coming full circle, mate, is where I'm seeing is that crypto's increasing, share market's increasing, confidence is going to come back into the market. Now the election's here. The US government, first year, they really want to sort of hit home and prove everyone how great they are. Stimulus packages, liquidity is going to hit that economy.
Decrease interest rates.
Yep. And then with Australia, how does that affect Australia? Well, if America's essentially putting more liquidity into their economy, so printing money essentially, and putting it in there, then what that actually does is it affects their dollar value. And then Australia, like if you look at Australia's dollar, it's been decreasing pretty significantly over the last sort of like 6-12 months. It's been dropping down from like 70 odd cents to like 64 at the moment. That's not good for Australia's economy. So if the Australian dollar is high compared to America, like people aren't going to come in here and they're not going to holiday here. They're not going to buy our products because it's more expensive. So then Australia goes, oh, shit. Like we need to strengthen our dollar against the US, and we need to make it a little bit more attractive. So that's kind of like the imbalance that's going on, and then that brings Australia to follow suit, because America does lead the world in that sense, and that's a bit of an interesting recipe for 2025 coming forward. I feel that confidence coming back, we will see different, I guess, ease of credit, and that can happen through interest rates cutting to stimulate that level of economy. So it's just not going to be the new normal is not like is going to be sort of reverting back to it, where like don't just throw your money at anything. Think that property is the only asset class that goes up. It goes down, and with leverage can really kill you. So just be smart about it, and don't get caught up in sort of savvy marketing campaigns. Do a bit of research, talk to different people, and create your own thesis. Because
like I'm getting two narratives from you here. You're bullish on 2025 in property, but also beware.
Yeah. Well, I think it's always beware. Like the biggest thing that I'm trying to help people with is
so why are you bullish then? Why are you bullish if you're like, be careful because it's a new norm, it's going to be lesser growth rates, all that sort of stuff? Like if that's the case, why are you also bullish?
Oh, it's just not the norm. Like last 5 years, like people have such short-term mindsets, and they're and also you zoom out further. It's not just the last 5 years. Basically, let's be face it. GFC hit in 2000 end of 2007, 2008. America, Australia didn't really see it till end of 2009. Market kind of bottomed there. In 2009. That's what's that? 15 years ago. So, like, a lot, like people in this generation, like the 20s and the 30s and even the 40s, like they haven't seen those like really challenging times financially.
So are you saying we're coming into a challenging time?
I wouldn't say we're coming to a challenging time. I like you challenge me here, mate. All I'm saying is like there's growth to be had and good growth to be had in the right locations.
Okay.
And where people will go wrong is by focusing like in the wrong locations. Like oversupplied markets will come through in units in high-rise apartments in major cities. In regional locations or like outskirts of cities, there'll be those house and lands that there'll be more and more releases coming through, and that with that increased supply will dampen that the growth of the land. Building materials, I don't like the cost of building won't be increasing what it was because we haven't shut down the whole entire world's logistics centres, so ease of sort of trade is still there. So I'm bullish in that good quality property in good quality locations that are undersupplied are going to do really well, and that's where using data is essential to help you outperform that market. Where will we go in the next couple of, like, inevitably there's going to be some form of pullback. So you don't get 15 years of strong growth to expect another 15 years of strong growth. You have to pull back to go higher in any financial market. We've seen a bit of a slowdown in a lot of the sort of major centres over winter. As an example, smaller cycles, like there is generally a slump in winter. That came through this year. It hadn't been there over the last couple of years because people, it's that lag on effect of people hunting for property, not getting it. They're in the market for a lot longer, so they keep looking throughout winter. They get those like buy fatigue. They hit it. So now you can see it's sort of reverting back to that new normal where winter this year in 2024 was quiet. Like Brisbane went for a mad pump and then pulled back a little bit. Sydney's the same. Melbourne was just obviously always a bit rubbish just because of what happened there. But it underperformed compared to the other major capitals like Adelaide, Perth, Sydney, Brisbane. That's why I'm talking to you about Melbourne, Victoria being an interesting market because it has been suppressed through certain government ruling.
Yeah, absolutely.
And it's like, well, everywhere else is pumped. This hasn't. And it's that inevitable sort of like all regions in Australia over a 30-year period grow at similar rates, that 5 to 6%. So if these are other major capitals and have risen by 20 to 50% over the last 3 years, and Melbourne's has gone backwards, just think about it.
It's got to come all rise, all tides left the boats, right? So
yeah, well, that's one of those, like the Buffett quotes. It's like I am definitely getting more and more. I guess I'm a valuer. I'm a bit more risk averse in my background, and I don't target markets that might have that gross outperformance. Like I've got clients that are like, oh, I just want a really strong 1 to 4 years so I can sell out and then I can use that to buy. And I'm like, you're trading property and you're trying to pick tops of markets. Like I'm not dealing with. Like, I'd rather deal with people with a medium to long term mindset.
Yeah,
because you can go. If you risk too much in property with leverage and go into those smaller towns and you're looking at the data points and the data's great, well, you're still susceptible to an anomaly. Like, what if these greater political parties can't get their shit together and something happens? Like, and then you're left with a house in the middle of Broken Hill. Check out that. It's in the middle of nowhere. It's a massive mining town with all the good growth data. It's like, supply is super low, demand's increasing, rents are through the roof, but it's a one-trick pony town.
Yeah.
And it's like,
Rise up.
And this is like during hard times, and I'm not saying there's hard times coming, for sure. There's always hard times coming, but you can reduce that risk by targeting the best locations to buy into for your personal perspective. And why I'm like this is because I've seen people trying to sell a property, and it might be worth 800 grand. You get a value, we go through, get value. You paid 800 grand for it, 6 months ago. All the evidence around there supports it over the last 6 months that it's worth 800 grand. But if you have to sell that thing and nobody wants to buy it from you, it's not worth anything. It's only worth what someone's willing to pay for it.
Yeah. This 1 to 4 year outlook and getting growth in property, I believe it's most likely come from the pandemic times where properties went psycho. And it's like trying to, it's like when you see a chart of the index fund just go up crazy over a year, and then you want to get into the market and you go, I want that same growth. But like it has to either like slow down, reconsolidate before it can go again. Like that's kind of like where we're at, right? Like, and I think, well, especially if you're trying to do if you're trying to do it in a short-term period of time, any investor's just going to lose out. Like this, my philosophy is that the shorter time period you give yourself in anything, the more stress, the less likely, the more stress and less success.
Yeah,
make that a quote.
If you want to take using leverage is challenging, and I know we talked about like last potty around shares, property, what's sort of best, and property is that lower risk vehicle, and like in general, like property, it's a safer bet because if you can hold it through that longer term, it recovers because it's not just an investment asset. But I don't know. I just see people, especially the younger generation, everyone like is such short-term mindset, and it's just not how you play the game. So I'm just trying to, I guess, shed that light on it. I guess there is a bit of a plug there in using right data and using the right team around you to get that level of success.
But I mean, they don't have to use us. They can just go find somebody that's good. I mean, we're just trying to like let people know, like, yeah, there's growth out there. It's not going to be as 10% to 40% growth, but there's growth in certain locations. These markets move, these other markets, international markets move the Australian market, and just do it in the safest way possible.
Yeah, and that's, I mean, we'll keep you updated is what I'm saying. And well, we talk about the 18.6 year property cycle. I am very interested in that, and that's talking about peaks coming through in the American market in 2027.
We need to talk about this on our next podcast episode, so stay tuned for that, guys. We'll talk about the 18.6 year market cycle, where we're at, and what it looks like for you. It's super important, so stay tuned for it.
Yeah, good little sprinkle of a bit of cheese there, because I could probably sit here and talk for bloody ever, because this is seriously like, this is what lights me up, because obviously I'm heavily invested and I want to know, when these sort of waves are coming, how to profit out of it. It's from everything I can see and understand, you can't pick tops in markets. Like if you could, you probably you're
not teaching people how to do it. I tell you that much.
You're not working whatever job you're working right now. Like you're done. So just don't think that you are better than what you are. Like it's just like I'm constantly checking myself. Like I still don't have confidence in when that exact peak's coming through, but I know by looking at the market every single day and buying property every single day, I'm going to be one of the first people to see it. And because we don't just buy investment properties, we buy owner occupiers. So I'm deeply entrenched in those markets throughout Australia, and I'm seeing these trends coming through. And the hard thing is that what you'll see on the way down is, a discount, and then people get excited. Oh, we can buy this, and then they buy it, but then it keeps dropping. They call it like catching the falling knife.
Let's not get too far into the juice.
All right, yep. Wrap it up.
Yeah, we'll wrap it up. We don't want to make it too long for you guys. Thanks for listening, guys. That's a good thing about market cycles. We'll follow on with the 18.6-year market cycle in the next ep, and see you on the next one. Thanks for listening.
Bye for now.